Hello and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Sobha Developers. Can it be accumulated at these levels or we can see more downside? So let's get started. First of all, disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Sobha Developers, here's a small request. Kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. For detailed market or company talk or one-on-one discussion you want, you can directly email me and we can work things out. Now about the company, Sobha Developers was established in 1990 and they provide infrastructure and real estate services. Claims to be the fastest growing property company here in India. Deals in high-end property construction across India for high net worth individuals and large properties. Uh, this has a lot of strong business fundamentals. The debt is there, but not that huge as with other real estate companies, and they get mega projects which they complete relatively on time compared to other companies. The market cap of the company is around 4,000 to 5,000 crores at the moment. If you look at the numbers, and these are December numbers, so sales went down by around 22% year on year. Profit dropped by around 60%, and this was quite evident because it's only now that the demand is coming back, that people are looking at buying into houses, etc. And probably FY22 will be big for this industry. So rather than looking at these quarterly numbers, we should look at what lies ahead, and I believe that things will improve going forward. The debt is high, but again, this is a real estate company, so it would be having such kind of debt. A high gestation period is always there with such companies. Return on equity of 11.6%. Operating profit margin is of 13%, which is decent, but not that extraordinary that someone would go ahead and buy into this company. There are many consumption companies that are having a better, much better return ratios with valuation slightly higher, but still there are chances to be bought into those companies. If you look at the performance of the stock and the company, stock is up 350% from the lows in February and March. It has gone up a lot. It's around 440, 450 rupees now, went to 500 or so. Around 440 it is trading at. It was around 100, 150 rupees when the real downturn happened. Have surged 50% in the last 2 months, and now it is in a consolidation mood over the last 2 weeks, with the markets also consolidating. It looks like that has finally gone into consolidation. High promoter and institutional holding is there with only 18% free float, so 82% of the investment are with the big wigs. High debt is a concern with the company, but let's see how they go about in the coming quarters. Numbers should improve as things open up, so I'm pretty confident that probably by second half of this year or by FY23 onwards or start of FY23, numbers of real estate infrastructure companies would get better. I'm not saying that it is going to be one of the best in the last 20 years, 15 years, but would still get much better than what we are getting in FY20 and 21. So things will improve a lot. So maybe the stock price will not fall that big. Maybe the stock price will surge, but it won't be such a surge that it could end up being a multi-bagger. So one of the best property companies, along with say Godrej Properties, Prestige Estate, Sobha is also right up there, that one can look at for investment from a 2-3 year point of view. What were the reasons for the decline? So sector was under stress for a number of years. So it is not that the pandemic has brought the shares down or brought the stock down completely over the last 1 year or in 2020. It is because of the sectoral downturn or the economic downturn that we have seen in India since 2017. and we have seen that happening from 2017 October November. So all of 2018, 2019, and 2020 has gone by, and so 3 years of complete slump in the industry, as has been in many industries in India, has led to the stock price being going down so much, and people staying away from such sectors. Now, current scenario, the pandemic and everything, the lockdowns, shutdowns has also deepened matters, and that's why the stock nosedived in February, March of last year, and we saw less than 200 on the stock. But the recovery is taking place because the recovery is taking place on the ground as well. So it will take a year to revive. That's what I'm saying, that it may take FY20, all of FY22 to revive, and the big years would be 23 and 24. But these are the times to really get into such stocks. See, the numbers optically will keep looking good in FY22 and FY23, and that's why I believe that the stock price will keep going up. Investors are looking at safer bets, so at that point of time they were looking at safer bets. So the reason for the stock to decline were plenty, and one of them was that people were looking at cash rich companies, or companies with cash, companies which are more into defensive nature. And we saw how pharma and IT performed from April onwards, and even mid cap IT is doing extremely well. People are looking at the consumption sector to pick up as inflation goes. Inflation rises, I believe consumption will do well, because the companies in the consumption sector, we keep on raising prices more than the inflationary, you can say, expense that the companies are facing. So we will see that most of the consumption stocks will do well. So people have been looking for other sectors in that regard, because they have been pinched in 2007, 8, 6 with buying into real estate companies and not making a lot of money over the last 12, 13 years. Concerns are there for executions of projects and funds. So you have to understand that the whole business in real estate is of a high gestation period, of a long gestation period, in which there is high debt involved, in which there is no, you can say, exchange of cash very quickly. So it is very difficult to sell properties, very difficult to arrange for buyers of properties, etc. And we have seen how inventory has been left without being sold in the last 3 years. So people are scared that if that continues, the stock prices may go up temporarily, may go up for 2 3 months. These are very good for trading bets, but people might not look to invest into them for 3 4 years. You cannot safely invest into these companies that okay, over 3 years, 4 years, it can give you 15 17% CAGR. These stocks would either go up very sharply and then sustain those levels, or just go down virtually as a nosedive, and that is the kind of volatility you face buying into infrastructure or real estate companies. So business being totally stalled in 2019 or 2018, I mean, in those periods business had not gone anywhere. There were no higher sales growth, etc., and those were the reasons for the decline in the stock prices. If you look at the technicals of the stock, it is overbought, and it was overbought some 2 3 weeks back. Now it is consolidating. The strongest support lies between 360 and 400. I would wait for 400 to be breached, and probably 380 to 390 to come for me to start accumulating the stock. I feel that it may consolidate for a couple of weeks more. I think the market is looking in the same manner. And the heavy up move is expected above 520, which is still a fair way to go. So I think 10 to 15% downside cannot be ruled out on the stock. But if you buy above 520, then the big surge would happen. So what needs to be done? In my opinion, avoid if you have not bought, and if you are having, then hold on to it and keep track of numbers. Have a 3 4 year time frame. Look for a major 50 70% up move to exit and book profit. It is top company in this lagging sector, so that won't be an issue, and have less than 5% exposure. So this was my video on Sobha Developers. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon.